One fund on point for today, the expert to talk about it. Welcome to the ETF of the Week. Yes, this is the ETF of the Week where we get the latest take from Todd Rosenbluth, the head of research at VettaFi. And if you go to VettaFi.com, you'll find all the tools that you need to be a savvier, smarter investor in exchange-traded funds and to get more details on the new, newsworthy, trending, and timely ETFs that we discuss here. Todd Rosenbluth, great to chat with you again.
It's great to be back.
Your ETF of the week is
the Franklin International Low Volatility High Dividend ETF, LVHI.
LVHI, Franklin International Low Volatility High Dividend Index ETF. An interesting pick right now, a lot in the name, but there's more than the name and why you picked it. So why this fund right now?
Well, we'll probably dive into each of the aspects of the name, the international, the low volatility, and the high dividend ETF. So why did we pick this? We find that investors still are probably underexposed to international equities, which have outperformed U.S. equities through the first roughly 7 months of 2025. We think one of the reasons they might be is one, they didn't pay as much attention overseas, but also they're worried about what's going on. There's a trade war likely by the time that people are watching this that might be on hold. It might be underway. It's not exactly clear. You can reduce your risk profile and get international exposure. And a couple of quick things. This is a very popular fund this year. It's gathered more than $1 billion. It's been around for a few years, so much so that it is a Morningstar 5-star rating. That caught my eye also. I'm sure we'll dive into that in terms of its track record. But this is a strong fund for people who want a lower risk way to access overseas markets.
Well, okay, so that covers the international. I'm now going to jump to the end of the name because it is the Franklin International Low Volatility High Dividend Index ETF. And you've been trending strongly, you always have, because it also makes a better story for us here on ETF of the Week, towards actively managed funds. So why are you not using actively managed in this case?
So some investors are going active and some are not. So we want to give people the choice. This is a rules-based approach from Franklin. It covers both the low volatility set and the high dividend set, and the overlapping there. This is perhaps a cheaper way to get exposure to a smart way of investing as opposed to a market cap weighted approach to investing because it's less expensive than what you'd find for a active ETF at 40 basis points. We want to give people the choice, and they're choosing in many cases a index-based approach to get overseas exposure.
So let's go back and explore the other remaining elements in this fund. Low volatility. I find it very interesting that you're looking at low volatility now, because as we record this, we've seen 18 straight days where the stock market didn't even move 1% on the day. Now, that's not a record streak by any stretch of the imagination, but it is a long streak. And so while everybody's been saying, oh, this market has heightened volatility, well, we had it in April. We don't have it now.
Well, so I'll go with the adage, past performance is not indicative of future results. Just because 18 times in a row it hasn't happened, it doesn't mean that we could not see more volatility. Look, the market is essentially saying there isn't going to be a trade war. There aren't going to be tariffs in place. The market continues to climb higher, both U.S. stocks and international stocks. Now, I don't know that everybody is comfortable with that, even though the consensus suggests that they're comfortable with it. So if an investor is concerned about volatility because it feels like there might be some tariffs that get put in place for some of the countries, you can get exposure to the stocks that are least volatile. Now, again, the stocks, not necessarily the countries. So this is an ETF that, as I looked at it coming in to this conversation, was overexposed to Canada versus a broader benchmark. Canada is the largest of its country exposure, roughly 14%. And this is an ETF that is underexposed relative to its benchmark to Japan. Now, Japan is 13%, but for most developed market indices, Japan is around 20%. So more exposure to Canada and Switzerland, which I didn't include, less exposure to Japan at the stock level rolling up to those countries.
Last element in the name of the fund, high dividend. How high? What's the yield, and what's the yield we would expect from this?
So the yield is, I believe, 4%. The SEC yield is. So that's above average in what you'd end up getting. This is going to choose companies that have both a low volatility and a high dividend attribute to it. So as I look at the holdings off screen, for those of you that are watching on video, Novartis, Shell, Suncor Energy, Canadian Natural Resources, these are some of the stocks that you'd find within the top 10 holdings within the portfolio. So 4%, that's above average than what we find in a market cap weighted approach, but is not super high that I'm concerned. I think we talked about a high dividend yielding ETF when we were around July 4th. This is of similar in that it looks for the higher dividend stocks, higher dividend yielding stocks, but you're not going to have as much of that dividend risk if the yield was 7, 8, 9% on the individual stock level.
I've got to go back at something you talked about, which is this is a fund that gets 5 stars from Morningstar. And oh, by the way, if you took a look, well, last year, 2024, it was at the very top of its peer group. It was the number one fund in the foreign large value category. But if you look now, if somebody goes to Morningstar data now after hearing us talk, they're going to find that it's not at the top. In fact, it's at the very bottom of that same peer group. It is up 10.5% roughly for the year, but it's dramatically lagging the category. And this is a fund that has shown it. It was number one in its peer group in 2024. It was number one in 2022. It was number one in 2018. But it's had 2 years, 2017 and 2020, where it was in the bottom 5%. And like you said, halfway through this year, dead last. So what about that in terms of volatility within a peer group and that characteristic of a fund that can be a little bit feast or famine? Again, tremendous long-term record. If you've ridden through the doldrums, you've been okay, but it's not always easy to ride through the rough parts.
So I'm glad you called it out. I'm not looking at the data right now as you and I are talking, although I did notice this data and anticipated this might be a topic of conversation. To me, what this fund is, what LVHI is consistent. So it does well when international markets do okay and or are struggling and give you exposure, but give you some of that upside participation. But when international markets or developed international markets are rocketing higher, this steady Eddie approach to investing, lower volatility, high dividend strategy is going to be towards the bottom. You should still probably be happy with a 10, 11% year-to-date return. Obviously not as happy as if you were in a traditional approach, but this is a more defensive way. This is a lower beta approach or lower volatility, lower risk approach to investing. So U.S., non-U.S., you're going to find out that when you take a lower volatility approach, you're going to do okay in the choppier time periods internationally and do less okay on a relative basis, but still be positive in those up markets. I think that's something that some investors should find appealing. $1 billion worth of investors' money has gone into it, agreeing with it. That's why I wanted to highlight it today.
It's LVHI, the Franklin International Low Volatility High Dividend Index ETF. It's the highlight, and it's the ETF of the week from Todd Rosenbluth. Todd, great stuff as always. Thanks for joining me to talk about it.
It's been a pleasure.
The ETF of the week is a joint production of VettaFi and Moneylife with Chuck Jaffe. And yeah, I'm Chuck Jaffe. It would be great if you would check out my hour-long weekday podcast by going to MoneyLifeShow.com or by searching for it wherever you find your favorite podcasts. Now, if you're searching for more information on your favorite ETFs, or maybe what's going to become your favorite ETFs, go to VettaFi.com, where they've got a full suite of tools to help you make yourself a better investor. They're on X, Twitter, at Vetta_Fi. And Todd Rosenbluth, their head of research, my guest here on ETF of the Week, he's on X as well. He's at Todd Rosenbluth. The ETF of the Week is here for you every Thursday. Make sure you don't miss an episode by following along on your favorite podcast app. And you got questions or anything else, make sure you send them in. We'd love to hear from you. Till we're back next week with another new fund for you to consider. Happy investing, everybody.